for joining us. We have a very serious topic at hand. We're talking about, is the world heading towards a debt crisis? I'll start off by reading the numbers. We're facing increased food inflation, interest rates, impacts of COVID. February 2024 study identified that global debt levels reached new record high in 2023 of 313 trillion, which is about 100 trillion more than it was about 10 years ago at 210 trillion. 70 countries are at risk of a debt crisis. Lebanon, Russia, Sri Lanka have already defaulted. And even more leading economic countries with leading economies, the US debt is growing at a higher rate of 1 trillion about every 100 days, and it crossed over the 34 trillion mark in January. Britain's tax burden is set to hit its highest since the Second World War, while public debt is close to 100%. So I've laid the groundwork. It doesn't sound too promising, but I'd love to hear from our esteemed experts about where do you see us at the moment? Are we headed towards a debt crisis globally? Are we in one? And let's start there.
Thank you, Salim. I think having heard those numbers, it is difficult to sort of paint a positive picture. But I think before I dive into that, I think it's important to understand how we have got here. Obviously, post the credit crisis in 2008, we've seen global debt levels rising at a very fast pace. But particularly in the last 4 to 5 years, given the impacts of COVID, the pandemic caused a complete shutdown of the global economy. Countries, both developed and developing, ended up in a position where they had to borrow to finance spending on health infrastructure, spending just to make ends meet and ensure that their local economies don't face more strife than they already were. Coupled with the Ukraine-Russia war, where we've seen food price inflation rising at a higher pace, rising US interest rates, all of those individually would be enough of a shock to the global economy to cause issues in terms of debt repayments. All of them together has caused, obviously, a more worrying situation. I think the IMF, the World Bank as well, they predict 60 to 70 countries are in proposed debt distress. Countries such as Zambia, Ghana, Lebanon, and Sri Lanka, I already mentioned, they've already defaulted. And I think the burden of that is primarily on developing countries, because at the end of the day, you mentioned the US numbers or the UK numbers. At the end of the day, very large proportions of that debt that they do have is to themselves. Almost 1/3 is payable to the Bank of England, for example, for the UK. But countries such as Pakistan or Egypt or Nigeria they don't have that luxury. They have foreign currency denominated debt, usually US dollars. And somewhere like Nigeria, they spend almost 90% of their government revenues on servicing that debt, whereas the US maybe 6 to 7%. So yes, I think in a nutshell, I think what is apparent is that there are a number of countries that are on the precipice or that will face pressure from those factors that I've mentioned. And probably proactive action is required from their creditors, both multilateral and bilateral countries as well.
Yeah, you definitely hit something I wanted to discuss later in terms of who's being affected and how and to what extent. But looking at the greater ecosystem at the moment, would you say that we're heading towards a debt crisis, or are we in one at the moment with maybe the culture of being okay staying in it?
Yeah, I think, look, the only way to sort of address that question is, again, if you look at the number of countries and the way their revenues stack up against their expenditure, you would be hard-pressed to be able to predict that they wouldn't have an issue in terms of servicing a lot of that debt, especially the foreign currency-denominated debt and what is known as a debt trap, effectively, where they have foreign currency-denominated debt, they don't have enough foreign currency reserves, and their foreign currency revenues are nowhere near enough to cover even servicing of the interest of that debt. So yeah, we're definitely at the edge of it. I would say potentially even for some countries in the midst of it. Okay. But the good thing is, I think regulators and multilateral institutions, and we could hear from Nadir on that as well, have recognized this, and via mechanisms such as the G20 Common Framework or the Global Roundtable for Sovereign Debt are trying to address that in a more proactive manner.
Yeah, we'll jump into those intricacies in a second.
Yeah.
Just want to pose the question to that as well. I think your answer was good in terms of it's different for who you're asking. Depends, on the country and what situation they're in. Would you say that we are in a global debt crisis or heading towards one? How would you define it at the moment?
Thank you very much. Maybe just build on what Ali mentioned. We are for sure in an era of high debt. So if you look at the global economy, I would like to also segment it because there are developed countries, there are emerging and developing countries, and then we have poor countries. Debt is rising and increasing at all three segments. Of course, it has a lot of problems, which we will discuss. But for the developed, advanced countries, they know how to manage it. They can leave the US or Japan. They can manage with the high debt levels. But this is not the issue for the emerging and particularly the low-income countries. I lived long enough to remember the days in which we launched the HIPIC debt initiative, which is highly indebted debt initiative in which the international community come to solve the problem. So we are seeing now most of the countries that were really provided with debt relief and support are now accumulating high debt levels. And I'll be happy also to focus much more on the developing countries and particularly the region in which we are here. The situation of the debt was rising before COVID-19 across the board, and particularly for the oil importing countries. And you need to think of the COVID-19 by adding 10 percentage point of GDP to the debt level across the board for developing oil importing and oil exporting. So for an average, if the oil exporting country had a 30% of GDP, they are now 40% on average. And for the developing, when they were like 50%, they are 60%. So COVID added like 10 percentage point. And I think that was a useful response. Countries needed to provide a lot of subsidy to private sector, to the poor people, and to mitigate the impact of COVID-19. But I think the situation after the end of COVID, we're seeing now of tightening monetary conditions, the increase in food prices emanating from the conflict in Ukraine and others, rising inflation level. We are seeing build up of a debt to a level, I think, if I only talk about the developing countries, 15 countries are already debt distress. 39 countries in high risk of debt distress. So we are heading to an era in which we are really, countries are struggling with the debt levels. And so it reached a point in which the international community need to recognize that's going to be a problem unless we put in place measures to try to address it.
Exactly, and I think you also brought up an important point. It's that this problem isn't new. It's compounded by the recent developments from Russia-Ukraine war, from COVID and things like that, which is adding on, onto this existing and ongoing situation. So before we go into looking at solutions, can we describe why does it matter to address debt? So when a country needs money to operate, it's either revenue or borrowing money, correct? So what does that look like on the ground when we're talking about a country in debt? Maybe if there's an example that you can give to say what does this translate into in terms of real-world economies for an individual country that is in debt?
Look, I think at the end of the day, as you said, a country has choices to make when it has debt. There is an opportunity cost to the interest and principal payments that they have to make to any creditors. Do we invest in health infrastructure, or do we pay our debt? Do we invest in schools, or do we pay our debt? Do we invest in social protection, or do we pay our debt? So for a country that has those debt levels, and I think I mentioned to you, Nigeria, obviously, over 90% of their GDP, of their revenues are towards servicing their debt. Pakistan, over half of their revenues are towards, would need to be, if they pay the back, would be to service their debt. So I think on the ground, what it means is almost a loss of economic value, a loss of societal value for those countries. And I think we saw it with, Mr. Nadir obviously mentioned that, we've seen this before, I think in the 80s, where you had oil price shocks causing a number of Latin American countries to face similar debt crises. Argentina, Brazil, Peru, Bermuda, and it's a fact, it's called the lost decade because they had to make choices whereby they forego investing in the proper infrastructure within those countries to support the local population so they could service the debt that they'd taken on to continue operating. So I think, yes, on the ground realities are that public infrastructure suffers in order to service a lot of this debt. And we've got numerous examples of countries that are unfortunately grappling with that at the moment.
But what you're speaking of is more in developing countries more so than developed countries, correct? So the burden is already on them more, while, as you'd mentioned before as well, like the amount going to repaying these debts is much less in, countries like the US or other places as well. So, I mean, now let's move to the solution side, I guess, identifying the problem, and maybe that's where Nadir can come in, being with the World Bank, about when you look at solutions, like, because what Ali had mentioned is really addressing the fact that developing countries are being hit harder. Most of their, GDP coming in is going towards paying back these debts. Long-term growth is stunted. So when you're looking at solutions to help out these countries, how do you bring this comprehensive approach, be able to address in the short term, to maybe with devaluation to bring in investment, but at the same time, look at the long-term growth of these countries?
Yeah, look, I think just to add to what Ali on the problem side, it's one for countries that face a solvency problem. So high debt level push a number of countries in solvency issues that cause financial crisis. Yeah. I mean, there are many countries, you mentioned Argentina, we have in this region also Lebanon, just example. So that can lead you where we see countries need decades or a long period of time to recover. But assuming countries do not default on their debt, is still significant portion of public spending. Let's speak about the MENA region where we are. For the most oil importing countries, those that have high debt level, half of the budget is on debt servicing. So it's obviously crowding out essential infrastructure needs, social protection for the poor, social safety net, less spending on education and health. So it's very difficult to manage. So overall, you want the debt level need to be sustainable, need to be within safe range so that they do not crowd other essential government services, and then they don't cause financial and other crises. Looking for solution, we can, obviously, you need to grow. Most countries just think about it mathematically, debt over GDP. You want your GDP to grow more than your debt, so and that's going to be difficult at very high debt level. Then countries need to do a lot of effort to increase revenues as well. And many countries in the developing world in particular are not raising enough revenues to cover, and particularly for the oil importing countries. In this region, countries have 15% of GDP in terms of tax revenue, while the rest of the world is doing much more. So we have a scope for what we call domestic revenue mobilization effort. Of course, then you need to cut government spending. That's that you reduce that by 3 ways. The last one is to cut government spending. That's not essential. It's very hard to cut government spending. It's politically and socially difficult. But then they need to prioritize where the spending is ineffective and inefficient. So there's a lot of avenues that government needs to tighten their belt, not to slow growth, not to stop important infrastructure or social services, where I just give you examples, maybe the subsidies that are not very well targeted that cause. A government need to tackle, and then you have to manage debt better. That's where fintech link become very important. Of course, it's also important for growth. It's also important for revenue mobilization. But it's important also to put in place system to effectively manage the debt.
But I think, like with a lot of countries, they fall in that debt trap where they're focused on paying that debt, which is only increasing because they're not investing enough in structures that will allow them to grow to get over that debt, and so it's kind of like a cycle of being in the same situation. Would you say the current approach, of multilaterals has been effective long term? I mean, is it something maybe takes time, as you mentioned? It takes like 10 years, it takes more, to work with countries like this. I'll present this, to either of you. But when if not, what's the direction that countries are going in terms of finding a solution in the short term to address the long-term problem?
We want countries not to be there. So our effort as a multilateral institutions is to make sure countries are continuing to managing their economy well, they're growing and not facing problems with the debt. We also work with the international community to put in place arrangements to help countries that are really in debt stress. As you know, the World Bank work with many other bilaterals to provide a lot of concessional financing. So we put an effort to ensure that the poorest, the least developed countries, they don't borrow on non-concessional terms. So we try to maximize the concessional terms working with others, and we provide it. We help countries to put in place effective debt management system so that they manage better. And between having a debt strategy and effective debt management system, you tend also to reduce the likelihood of rising levels of debt. But as I mentioned, also we work with many countries to make sure that they create fiscal space. You don't need to resort to debt. Maybe you could create much more. So we work on developing other avenues for public infrastructure financing, not debt, like PPP, other arrangements in which many developing countries, they only know to borrow to do public infrastructure, while you need also, we work with countries to develop government domestic debt markets that are missing in most of the developing countries. So there's a lot of scope for us to work with the developing countries to make sure they don't fall into a debt trap, as you highlighted. Importantly, also, we target very much raising the efficiency of public spending. Because a lot of times they borrow, but they could really, for the same dollar, you can get more mileage out of the same dollar rather than you borrow. So we focus our attention to try to help countries analyze and understand how they can get better development outcomes of same amount of resources rather than resorting to continue borrowing.
Yes, you mean it's like efficient management, on government side to be able to balance both, like gradually paying, the current debt, but at the same time making those investments and not losing by inefficient, practices and things like that, which are continually taking them into debt. Nice, you mean it's the balance of the two, and that's where it takes working with them. And there are countries though, like Egypt, Pakistan, leaning to other countries as well for that are investing maybe in infrastructure and things like that. Could you, Ali, talk about a bit what is motivating them to do that, and how that's been different, for example, compared to other methods?
Sure, yeah, and I think just to maybe add on to what Nadir said, I think the challenge so far has been with the repayment. A lot of this debt has been around the management of the debt money once it comes in as well, and I think there needs to be a shift, and we've seen it. We obviously operate in a number of these economies as well, towards more development-based solutions to the debt and to any restructuring that happens. Because, and I keep mentioning Argentina, I think it's a good example where they've had, I think, 22 or 23 IMF World Bank programs, so they keep coming back. So clearly there's an issue with the sustainability of the solutions that they're looking at. And I think a lot of it does tend to be, as he mentioned, public spending. I think, the average cost for electricity for an Argentinian household is $5 a month, which is incredibly subsidized. For an equivalent household in the UK or Italy, it would be $200 to $300 a month. So that clearly shows you that a lot of that fiscal space is being taken about by subsidies that perhaps it would be painful to take away from the local populations, but is needed for actual change to occur in terms of debt servicing. And you're absolutely right. I think, in terms of proportion of debt, obviously the IMF and World Bank hold large proportions of debt for a lot of the developing countries, but also bilateral creditors do exist. And China has been one of the countries that has seen its share of global debt to a lot of these countries grow exponentially over the last 7 to 8 years with the Belt and Road Initiative that they've taken on. I think it's roughly around $900 billion that they've lent out to countries across Asia and Africa.
But can you describe that actually? What do you mean by bilateral debt? Like, what does that look like?
So that's directly lending by either state-owned banks within China, for example, or even commercial banks, but on the directive of the public sector to lend to these countries. So typically what you'd have is, let's say they're building a bridge out in Pakistan, for example. They will direct their Exim Bank to lend a certain amount of money. At the end of the day, it's on commercial terms, it's a commercial debt, but it's under that pretext of the Belt and Road umbrella.
Exactly.
But it does still fall under commercial terms, which does need to be repaid, and if not, then it can lead to issues. We saw it with Sri Lanka, where they lost control of their own seaports and airports because they weren't able to service the debt that they had taken from Chinese banks on that. And I think that has lended a little bit of an added layer of complication, because when you look to restructure a lot of this debt, or if you look for solutions to resolving debt servicing, you've got a lot of different parties then that have to come to the table and agree to play ball. It's not just the IMF or World Bank or the US or the UK. There's China, there's Saudi, there's India. And sometimes it's difficult to manage the expectations of all of those different countries with regards to any haircuts that need to be taken. And at the end of the day, they're well within their rights to ask the question as to why they should lose out if the money hasn't been managed properly within those individual countries.
Yeah, no, exactly, and I think that's a key thing, where it's a different approach with different problems, different benefits. So those things need to be taken into consideration, because as you said, then like in the case of Sri Lanka, you can use your own assets in your own country, from getting into a deal like that. So now shifting, we are at a fintech summit. Where does fintech come into play here? Who would it empower? Would it provide any solutions, maybe that traditional finance couldn't?
Yeah, absolutely. I mean, we work with a range of fintech entities, both in the UAE and in the region. What we've seen is, the amount of positive impetus that they can bring to the economy through bringing more people into the banking system, increasing the tax base, because in order to access a lot of that finance, fintechs will come up with innovative solutions to bring people into the more documented formal economy. We've seen a general increase in revenues across in terms of the ecosystem that's been built. And I think Dubai is a great example in terms of the regulations that they've put into place, be it regulatory sandboxes, be it open API regulation, in terms of attracting talent, so innovation visas that allow people to come in and explore and set up without having a set income. That whole ecosystem, not just for fintechs, but for tech startups in general, has been differential in terms of the growth, both within Dubai and in the UAE as a whole. So I think that definitely there is an example that can be taken for countries that find themselves struggling for revenue growth in terms of using tech and building that similar infrastructure to ensure that they can maximize the value creation that can happen as a result of technology and fintech in particular.
Yeah, and I think what you're describing well is the bridging the gap of, say when a country receives, a loan, it's usually the government that needs to decide how that money is allocated to improve the local environment, versus, with fintech, it's a bit more decentralized, it's empowering the individual a bit more, allowing them to rise, with those resources as well. So yeah, it's creating the long-term growth that we've been discussing is needed, through being able to access it directly without having to rely maybe on government measures, for example. But as well, actually, Nadir, I'll first extend to you before going into more examples, but where do you see fintech, I would say, playing a role in finding solutions, for that crisis that we're speaking about?
I think using the same framework that I highlighted at the beginning, I could see the mapping between fintech and growth. It's very important source of growth that countries need to develop new industries and new services, and I think fintech in countries, we have evidence, countries that have really developed, provided support to fintech tend to grow faster. But also more important, it can be a very good source of revenue to the countries that are really struggling with limited fiscal space. And so the more that fintech and other industries and services are vibrant, they provided a lot of resources to treasuries that reduce reliance on debt. But also think of debt management. Many countries, they don't have good financial systems, they don't have data systems, they don't have information. So actually it's true, many countries, they don't manage cash well. They tend to borrow without using their own resources because they don't have a good handle for it. So the more financial sector services, information, the database are improved, countries tend to manage their own resources in a better way. So again, think of it as long-term growth enhancing. It's a really very good source of revenue for the government when these industries prosper. but can be very helpful for the management of their own cash flows, their own, they don't need to resort to, and as I emphasize also one last point, many countries borrow because that's the only thing that they borrow. There are no developed financial markets, so the internal as well. A lot of countries that they don't have stock markets, they don't have a government debt market. Exactly. And so the only thing that they know, they go outside and borrow on highly non-concessional terms. So the more they can also develop those markets, they can increase the pool of financing available, maybe reduce the reliance on the treasury for financing most of their infrastructure needs. So it's obvious there is a clear link between fintech and debt management and debt reduction.
That's a good point. I mean, first of all, it extends their reach, to be able, as you said, more avenues of revenue, to bring into the country. It allows local markets to get access maybe to things that they aren't available in their own countries in terms of doing business opportunities, financial assistance as well. So exactly, I think when we're not restricted by the borders anymore, of a nation at all, but at the same time, it seems like what's necessary, and the National actually wrote an article about this, exploring in terms of to be able to operate fintech companies, you need to have the regulation and ecosystem that can help sustain it, to help develop, allow companies to grow. In our article, we had identified, that the FATF had said only, for example, in the case of crypto, that only 30% of the world has a regulation around this. Of that regulation, most of it is reprimanding it, saying, no, we don't get it. We, at the time being, it's illegal to practice, or, they don't have those actual laws to allow companies to thrive and grow, since it's still new and we're still trying to understand it. The UAE has, different agencies from VARA to ADGM and DFSA as well, like all working together to experiment, to work with companies. How important is this in terms of creating this regulatory framework to allow fintech companies to be able to find these solutions in your experience?
No, it's imperative. In fact, it's one of the key success factors. If I looked at Dubai and the UAE in terms of the ecosystem that they have built, especially from a regulatory perspective. So obviously the challenges that a lot of these tech startups will have is once they set up, if they were exposed to the full plethora of regulation that exists to be a financial entity operating in the UAE, they would struggle, both in terms of manpower, in terms of systems, in terms of compliance. So the regulatory sandbox that's introduced by a number of the regulators in the UAE is helpful. It waters down the regulations that a lot of these entities have to contend with, so that they can ease themselves into addressing a lot of those compliance needs. Exactly. Similarly, the Dubai FinTech Hive within DIFC, over 700 startups learning from each other, that sort of camaraderie in terms of understanding, because they all face similar issues, whether it's cash flow related, whether it's valuations related, and again, having that system where you can access and learn from other people's problems and solutions. And then funding, most importantly as well. If you have access to all those startups within a certain market, whether it's DIFC, whether it's ADGM, to be able to attract investors in and have data to show, okay, these are the startups we have, these are the kinds of numbers they're looking at, this is the revenue and growth potential, all of that helps with aiding that ecosystem to develop. And we've seen it, from ground up. We've seen that happen both in Dubai and in the wider UAE as well. And you cannot discount at all the impact that it's had in terms of driving that initiative forward.
Yeah, and this is also the time to invest in with any new technology. Like, we're not going to see the results of it right now, but that when you develop the infrastructure, you have the foundation. It reminds you of like additive manufacturing, known as 3D printing, when we're talking about automation even as well. These were all things that were existing before, but weren't really present because it hadn't been developed, but they were invested in early, sustainability as well, and then it leads, to a future where it's a developed industry and those countries will excel.
And we've been, as Lloyd, we've been encouraged to set up our own sort of accelerators or digital studios here in the UAE and in Dubai to help those startups as well. So there's a push to try and further build that system out. And obviously we're proud of the role we play, but it clearly is a direction that's coming from the vision that the city and the country has in terms of developing a number, not just one, but multiple unicorns from the country.
Definitely. And then we have closing thoughts, less than a minute. How would you say, how important would you say like this investment, this drive to build, this ecosystem can help with the topic at hand, which is debt crisis?
No, I fully agree that just to summarize, I think we are heading for an era of high debt, and so all measures that should be put in place to ensure that we don't have many countries in this debt trap. And obviously, that important contribution that the fintech sector can play an important role here along the lines suggested. And I also share your views and Ali's views that smart regulations are there to encourage entry, growth, exit of the market, consumer protection, improve service quality, all kind of regulation, but you don't want to do it in a time in which to stifle innovation or stifle competition. So that's, for me, is critical because they have a role to play in financial stability, but you don't want to stifle competition and innovation at the same time.
Exactly, and developing that organic growth and different streams of revenue to not have to always rely on borrowing, for example, to get out of debt. They can do it themselves, and it's education in itself. It's all of those things together. And we're out of time, but this is a very vast topic. I mean, we can talk about it even more. But yeah, thank you both for sharing your insights, and thank you everyone for attending.